Hi guys, welcome to the weekend analysis for the 20th of September 2019. Now, if this is your first time here, please as always just pause the video, make sure you're comfortable with that before watching any further. If you don't really have any idea what this is, what I like to do every weekend, or most weekends, is really just provide a detailed analysis of the market on a technical level. There are going to be around 20 charts for you to consider for the forthcoming week, all backed up by technical analysis, and I'll also give a good market overview as well. A couple of quick things: I don't do get rich quick schemes, I don't do penny stocks, I don't do signal services or any of that nonsense. I have very detailed analysis, and that will become apparent in the next few minutes. I am currently registered with the CMT Association. I'm working my way towards my chartered status at the moment. So technical analysis is my thing. It's what I'm very well versed in. And again, I hope you get a lot of value from this. If you find yourself continually stepping in the brown stuff, you might want to stick around for a couple of minutes at the end. And if you do like the video, please subscribe to our channel. I think there should now be a little subscribe button in the bottom right hand corner. We try to upload once, maybe twice a week. So let's just dive into the analysis. Now, what I want to do is just highlight to you guys where the strength currently is in the market over the last few months. Now, this is the benchmark for the market, the S&P 500. These are the areas that you would want to be if you want to be a top performer this year. I know that there's many of you out there that probably keep going back to the same stock over and over, keep trading the same stock. You'll be buying it, you'll be shorting it, you'll have mixed success. But the reality is, if you're in these areas of the market, gold, precious metals, utilities, real estate stocks, tech stocks obviously were big up until a few weeks ago. So these are the areas that I want to see outperform the market from here on out. I'm going to walk you through a couple of charts, but the one thing that you need to be mindful of is the seasonality effect. Now, we know that the S&P 500 since the 1950s, September has, as you can see there, it's very, very clear, September is a month that is notoriously difficult. Now, I'm going to take it a step further and show you the seasonality for the month of September and how things play out. Now, I've deliberately kept this back until this very weekend, and the reason I'm highlighting it is obviously we're coming up to next week, and as we can see, it's the end of the month, the end of September, where seasonally we have a bit of an issue where we do see market declines. Now, what I'm going to be walking you through is obviously the charts. I'm going to get through a lot of stocks, but the S&P 500 we know is pushing up against resistance at the moment. Now, if the seasonality effect is to hold true this year, then you would expect a bit of a decline here. Now, how far it declines, who knows? I very much hope that the market breaks out to new highs and we see the stocks fly off into the sunset and everybody makes lots of money. However, I am mindful that the market hasn't really played ball like that for a good 18 months. Now, if we get a breakout, absolutely bullish all day long, get mega aggressive, do what you want to do. But I do not think we will see a breakout in the S&P 500 whilst the mid-cap index is hitting resistance here. I think for the overall market to take a leg higher, I think we need to have the mid-caps participate. So this is a chart that I sent out to social media this week. I think it's pretty clear what we're looking at here. I would expect if the mid-cap index breaks out, then I would expect the S&P 500 to follow suit. But it does look like we're getting a rejection here again at key resistance levels. So you actually need to have two breakouts here in the mid caps, and I think that would correlate with the S&P 500 breaking out. Now, this is the global 100 index. Again, we're very, very close to breaking out to new highs. This would be a positive move for the market. What this basket of stocks are really the top 100 companies based across the world. So you've got components from the US, Europe, Japan, etc. It wouldn't be bad news if we get a breakout in this particular ETF. So that's a chart that I'm watching a lot at the moment as well. Okay, overall market done with, all the good stuff. Let's get into the stocks. Now, for those of you that messaged me and emailed me after last week, thoroughly appreciate the kind words. For those of you that have just tuned in, last week I highlighted Etsy as a breakout, and naturally I think it's had a couple of investment bank upgrades, and we've had a huge spike, which, thankfully for a lot of you that watched last week, it was a good winner for you. My thesis has not changed. I think you'll always have to deal with ups and downs, but ultimately I think we do get to the 35-36% level there. Scalar. Sorry, excuse the funny term here. I spent my winter in Mexico this year, and it's an inside joke with my client groups because I was in a bit of distress at one point. But yeah, I think Zscaler is looking incredibly interesting. It's not a trade that I would ordinarily take because I'm really primarily a trend follower. I'm in trades generally for weeks to months. But it's forming a bit of a pattern there that you might want to consider and maybe do a bit of due diligence on. Alibaba is showing a lot of strength. Again, highlighted this one last week and just said, look guys, we're patiently waiting a breakout here, but I think this is the level to watch. I don't think you're getting any risk to reward proposition here by entering. I do very much feel like it would be a case of waiting for this breakout of the longer term downtrend line, and I think that would possibly offer the opportunity. Berkshire Hathaway, it's very clear that on the weekly chart here, we're in a bit of a sideways pattern, consolidation pattern, whatever you want to call it, and it's very much a case of waiting on a breakout either to the upside, and I also have to say possibly to the downside as well. So for those of you that are in Berkshire Hathaway at the moment, I think you can probably expect a bit of sideways grind. But for those of you that are looking for a new entry into Berkshire Hathaway, I think it makes a lot of sense to just wait for a breakout on a technical level above this trend line. Now, Okta is interesting. Now, I'm not going to get into the textbooks and what the textbooks say on what is happening at the moment with Okta, but what we can clearly see is we've got two very definite trends. We've got primary trend and a secondary trend, and the hope is that price does this. Okay, that's the hope. That's what the textbook really says. We are at a key level as far as I'm concerned. A couple of my guys have actioned positions on this around $100 this week, and it's obviously up and running 5-6% in profit, which is great, but still very, very mindful of the bigger picture of the overall market. I think we are seeing potentially a bit of a rotation back into cloud tech, but for that to hold true, I do feel like we need to see the broader market participate and start to move higher as well. I don't think the market is going to solely be able to rely on cloud stocks. And if the market declines, it would stand to reason that the cloud stocks would decline as well. So the message on Okta is bullish, but only just. ZTS, again, a couple of my guys have initiated positions in ZTS this week. Very clear upward trend channel. It's there for all to see. It always amazes me that I receive 5 or 6 messages or emails a week just telling me that technical analysis is nonsense, and I think this is an example of why it works. It just does. So yeah, bounce off support, off we go. It's very clear. You obviously get defensive if you get a break below that level, but ZTS, I think it's off and running. I would expect that to go and test the highs at 130, and we'll reevaluate once we achieve that level. Now, gold I wanted to highlight because, again, gold has obviously underperformed over the last few weeks, but the one thing that it has done is it's remained consistent with its support levels, which is bullish. So although we've obviously had a bit of a dip in gold, it's moving sideways, it's grinding a little bit. The facts are we're still in a bullish environment for gold at the moment. So if the market stalls next week, you can probably expect gold to participate to the upside. What that means is you can look towards the individual ETFs, maybe GDX, GDXJ. You could look at Kirkland Lake. Barrick Gold is a big one. There's many areas within the gold space that you could look to exploit. You don't need to go and buy physical gold. You can naturally go and hunt out the best performing stocks or ETFs. SNII is interesting. It looked like we were getting a breakout here this week. Now, the reason it's interesting is it's very much a case of just waiting for this hurdle to clear. For those of you that maybe jumped in down here, it's very, very logical that this area would offer some sort of resistance, and that thesis has proven correct. So for those of you that were in there, that would essentially become an area that you might want to consider, profit taking. And for new entries, I feel like a break above this level, and you've got a good 17% upside there. JP Morgan has been highlighted for the last couple of weeks. It's a stock it's holding firm at the moment. It's had a nothing week this week, but that's okay. We're still breaking out. And the expectation is that JP Morgan, if financials participate, then we remain bullish. And it's very clear above this level we remain bullish, below it not so much. Weight Watchers, those of you that follow me closely will already know that my guys got an alert a couple of weeks ago on this for $35. So that trade was actionable on Wednesday, Thursday. And yeah, it's off and running. It's up, I think, 5% in the last 2 days. Textbook, fully expected, and we look like we might be off and running with Weight Watchers. So Weight Watchers is incredibly interesting at the moment. I would ask you to maybe do your own due diligence and figure out if it meets your own trading plan, your rule set, etc. Don't act on any of these charts if you have no clue what you're doing. That just wouldn't be wise. But I think Weight Watchers, maybe do a bit of due diligence on it. Now, Netflix, however, is in a lot of distress. Now, the reason I say that, and I'm not here to pick on any of you Netflix guys. I know what it's like to either bag hold or take entries into the market that immediately reverse against you. I totally get it. But, I have to call it as I see it. And I think with Netflix, it's very clear that we've got a support level, and again, this dates back to July 2017. And when we kind of zoom in a little bit here, and for those of you that don't know, I've been bearish on Netflix since we had this breakdown here, okay? And one of two things was always going to happen when we got to this level. It was either going to rebound and move back to the upside, or it was going to fall away. We're falling away at the moment. Yeah, you can probably expect little, short-term counter trend bounces, but it's not an environment where I don't feel like you want to be buying the dip, and I've been very consistent on this over the last couple of months. I still feel exactly the same. There's no point in fighting the trend. You're just opening yourself up to mental hurdles, to a lot of stress. It will affect your job, your family life, your business, if you open up that stress by taking risky entries into the market. Yeah, fundamentally, you might be calling it correct. It might be a great company, but technicals just aren't supporting things at the moment, unfortunately. So Netflix, I think we go to 230. Exactly the same message to Square Inc. And we've had a breakdown, and this is absolutely textbook. We've had a breakdown followed by a retest, and it's looking like it's falling away again. This mini level might offer some kind of support. I think that's the hope for you bulls on Square Inc. But I think ultimately, again, and I've been consistent on this over the last couple of weeks since we got this breakdown, I do think ultimately we end up back at $50. AYX, I think it's interesting just for the fact that we could be looking like a move to the upside here. However, if we do get a bit of distress in the market early next week, I'd be looking at this level here as a key level in the market. I think around $100 would be the area to watch to see what happens here. And I think we would just evaluate it. I think with AYX, it's very difficult to get an optimal entry into the market. However, I think if we get a move to the upside, I think that might be the catalyst. Again, a few of my guys have been looking at this week with a view to potentially taking entry, just purely for the fact that Cloud Tech has had a Mike Tyson beatdown over the last few weeks. And I think we all recognise that it offers opportunity, but when do we act on that opportunity? And that's what technical analysis does. Semiconductors have fallen away a little bit. I think what we've clearly got here is a level of resistance that has held firm. So I think semiconductors at the moment, for those of you that are out there and you're holding maybe SMH or maybe some semiconductors, I think it makes a little bit more sense to get a little bit defensive if you're a technical trader. Obviously, if you're a fundamental buy and hold guy, then you'll continue to do what you want to do. But I think it's very much a case of managing positions closely. I think what I've tried to do this week is maybe highlight a couple of areas in the semiconductor space where you might want to do a bit of due diligence on. I think what we have here with Teradyne is we're looking like we're breaking out from around the bottom, and yeah, I think it would make a lot of sense if we get continuation. It's fallen away again today, like a lot of the semiconductor stocks, just on account of the overall market, really. I don't attribute it to the individual stock by any means. It's just the overall market playing havoc, I think, and China rumours. Same goes for Nvidia. Again, we've broken out recently. I think we can still remain bullish on Nvidia provided we're above this level. Ultimately, for those of you that are looking for new entries into the market, again, I think you might want to consider this level up here around the $200. That just seems to make a lot of sense on a technical level, given that we've got previous resistance around there. Now, ROKU. Now, I understand that ROKU has been a killer for many of you out there. And I think what I wanted to do this week, and I don't know if many people will even see this, that are in the ROKU feed because it's so busy. But I'm just going to walk you through why taking an entry here just isn't wise. Okay, now I understand support and resistance. Okay, you've got the 50-day simple moving average here, and I hope you can see this. This is what you would call a bearish flag. It was forming, buying the stock in here, absolute no-no. Then it fallen away. Then we got this bounce, and I had a look at the news feed, and I have to say there was one of my group got caught out by this as well, and the problem that we have here is you never take the entry on the first bar, the first green bar on a big dip like this, because it's what's called the dead cat bounce. You should always wait for the follow through day or the continuation day, as some of you might know it as. this was just not offering entry. I'm sorry, that's the technical view. Again, fundamentally, it might be a great company. I have no clue because fundamentals aren't my game. But, you know, you need to be super careful by buying this dip. There's a lot of selling pressure. This is the level that I'd be watching next. I think if you drop below $100, I think you go to 80. And we can see that with what happened, I think, in the past, certainly with ROKU, when we look here, when it dropped from 70 down to 25, this is it set the groundwork for us, and I would be very, very cautious on ROKU. AWK, however, is obviously a utilities company. I highlighted utilities at the start as an area that had outperformed the overall market. Again, this is an area that you might want to consider in the face of, you know, a choppy, volatile, indifferent stock equities market. You might want to consider some of the safety plays. I get that they're not as fast moving, but who doesn't want to be in a stock that has that kind of trend to the upside? It's broken out recently, that breakout. We have polarity, resistance turned to support, so the expectation is that starts to advance. Biotechs are again looking interesting, and again it just goes back to the rotation at the start where I highlighted XBI, and ABBV is obviously in that space. We've got a very clear downward sloping channel, and it looks like we're being rewarded with a breakout here. So for those of you that are maybe looking to get in on ABBV, I've seen worse entries, but I would be very mindful of the $77 200-day simple moving average. Tandem diabetes support looks like it's held. We have gap support, and that looks like it's absolutely holding true at the moment. Yes, we've had a couple of minor breaches. I get that. You don't need to highlight it to me if you're very pernickety with your technical analysis, but this is the way that I see it, and this is how I'm calling it. And it's actually one of my clients when we had a session this week, and this is something that he actually highlighted to me. So yeah, I think the support here is holding true, and I think there's 23% upside. Now, ALGN should probably come onto the radar. I think with failed moves, we often get fast, aggressive moves in the opposite direction, and I think that's what we might well see with ALGN. So for those of you that have been holding through the fire on this sideways chop, I think ALGN is probably starting to look rather interesting, potentially to the upside, especially when we consider where it's been in the past. I think it's been as high as $400. So yeah, it looks like we've got a failed move here, and hopefully ALGN starts to move off. PayPal, a couple of guys were asking me about this week. It's not really interesting at the moment, unfortunately. It's just kind of, you know, trading sideways. It's not really doing much. I think technically we can be bullish, but I think there are just better plays out there at the moment. It's it probably comes down to marrying a stock and when you should be dating it. I think as soon as a stock becomes uninteresting, you know, go and find something else that's going to treat you a bit better. I think that just seems logical to me. And we also have Amazon. Again, lots of messages, lots of emails about Amazon this week. Again, you should be dating, never marrying. However, I do think you've got 15-16% upside here. I think this is the level to watch very, very closely. I think a drop below that, probably less bullish, but ultimately it's Amazon. It's obviously massive performer over the last few years. It's obviously taking a bit of a breather. It's really done nothing for a couple of years now. So yeah, I think the expectation is that if, as long as you're above this level, or I would suggest around 1750, then the hope is that if the market advances, then Amazon will hopefully advance also. So excuse me. Now, as I said at the start, if you are somebody that struggles, you can stick around for a couple of minutes if you like. But if you have enjoyed this video and you've got value from this, feel free to subscribe to us. Like I said, we try to upload once or twice a week. It's not just analysis. We sometimes do technical tutorials and stuff as well. So yeah, the channel is starting to really grow. And if you don't know who I am, I'm Sam, and like I said, I'm registered with the CMT Association and working my way through my exams at the moment. But I also run honeystocks.com trading school. Now, I get asked all the time about the types of people, the types of traders that I can help. I think if you're somebody that's trying to fit trading around maybe a business or a career, maybe if you're trying to get away from day trading, I don't teach day trading strategies. Maybe if you want a bit more consistency and just learn this stuff for yourself rather than just following others, and it will help you immensely to learn how to do this stuff all on your own. I know there's many of you that follow me for the analysis and the trade ideas, and that's awesome. I thoroughly appreciate every one of you following, but ultimately over the longer term, it's not really going to give you the consistency or the success that you ultimately want. The only way to do that is really to learn for yourself. So those are the types of people and the individuals that I can generally help. And what I essentially do is work with you to build a trading plan and have a rule set that you can implement for the rest of your life. And what's unique about what I do, I also have my client community. Now, I don't know anyone else that does this. I publish every single trade idea to my group for complete and open transparency. It's all on my website. Feel free to go and check out track record. And whenever I post a chart to my group, a high conviction idea, I log it. And so you can go in and you can have a look to see the types of stocks that I'm recommending, the prices, the dates that I'm recommending, etc. And you can get a feel for whether or not the types of stocks, etc. are really what you're wanting to trade. I'm not saying for a second that you can go on and get 1400% returns in a year, because you absolutely cannot. Because you can never take every single position in the market that I post a chart for, because there'd just be too many. But what it should hopefully do is just give you an idea of what you could expect if you were to come in, learn, and be part of my incredible group and my incredible community. Many of you out there will be absolutely learning from losses, and listen, I get it. It's soul destroying. It affects so many aspects of your life that many just don't talk about, but I know exactly what it feels like. So if you're learning from losses, if you are maybe picking up tips from YouTube, you're learning from YouTube, maybe you just feel like Wall Street is swallowing you into a huge black hole, we genuinely believe in making a difference at honeystocks.com. You can go on and check out the testimonials from our client group. We're in heaps of countries now. I did not expect this when I started 18 months ago, but it's been incredible, and I've just got an incredible group of technical traders now. So if you are somebody that's maybe wanting to explore a new direction and you want to move away from what you're currently doing, I make it pretty easy for you. All you need to do is jump onto our website, click on apply, join, and tell me what you struggle with. If you struggle with your trading, give me as much information as possible, because a lot of the time when we jump on and we have a chat, then I can just get straight down to the nuts and bolts of it, and maybe just try and help you in some way. I'm not going to try and shove something down your throat that you don't want to sign up for. I just genuinely enjoy talking to people around the world. I've spoken with hundreds of struggling traders across the world at this point, and obviously not everybody signs up for what we do. Yes, we obviously have our program, etc., but that's not where it starts. I provide this analysis because I like helping people, and I do the same on calls. So if you're somebody out there that struggles and you maybe want to explore a new direction, feel free to go on, select a time, tell me what you struggle with, and we'll have a super informal chat. That's really it. So if you've stuck around to the end, thank you very much for watching, and maybe I'll see you on the next video or speak to you soon. Thanks.